Good morning, good afternoon for those in the Far East, to this webinar of Treasury Excel about trade finance. And trade finance, the value of it is very obvious among the Treasury community. And risk mitigation in so many forms is very prominent in these quite turbulent times. Today we'll talk about guarantees, letters of credit, and all related trade finance instruments. With some super experts, and I can't speak for all the audience, but I think many in there have trade finance as one of their many tasks. And we gathered a panel of super experts in order to take care that you as an audience can rethink about or think about your processes again, about your skills you require, about your infrastructure, and what to do in these turbulent times. My name is Pieter de Kiewit. I will be moderating today. And as mentioned, we have a great panel, starting off with Suchi. She has a very long and solid track record with banks and treasury solutions providers. She's head of solution consulting at Surecomp, who is co-hosting this session. So welcome, Suchi. Great you're here.
Thank you.
And she, of course, will be able to tell what works and doesn't work with her many clients. Then next, we go to Sander. He served many clients at ING, also in trade finance, and then changed sides, went to the, in the Netherlands, well-known company BAM, a construction company, an international construction company. And a very substantial part of his work is in trade finance and guarantees. And he can also tell the audience about what works and works not, and perhaps also some low-hanging fruit tips and tricks there. And last, but of course not least, a very familiar face in the Treasury community, Francois. Welcome, Francois. He used to be the group treasurer of ATEL and is the chairman of ATEL and EACT. He's an entrepreneur with Simply Treasury, and I expect that he will be the visionary in this session, tell about what's happening in there. Before we really kick off some practical aspects, this session will be recorded and distributed afterwards. There is a Q&A box, so please, if you have any questions, do ask and join. And we've got 45 minutes. I'm strict in that. So in 45 minutes, we'll wrap up. Let's kick off with Francois. So many unprecedented developments over the last years, but it becomes a bit stale this term, but still it connects really well what's happening also in trade finance and how to mitigate risk. So what is your vision on the biggest developments and how to apply trade finance instruments?
Yeah, thank you for the invitation. So it's fair to say that the current economic and political context reinforce the need for security and guarantees. And so after the pandemic, the subsequent supply chain shortage we faced, the escalation of the Russian-Ukraine conflict, followed by the war in Gaza, and now Lebanon, have focused the attention on the supply chain's resilience. And today it becomes a commonplace to get a comment like it's just in case in the logistic and supply chain management. So the globalization, although we talk about deglobalization today, followed with this attempt to reduce the exposure to external war and to re-import the production in our countries, have completely changed the rules. So the whole concept of supply chain, in my view, has morphed into a focus on how to be resilient and the capacity to mitigate the disruptions and significantly limit the impact of those that could occur, as well as risk and cost. And we will talk about both, I guess. So the use of guarantees has not changed that much, maybe increased, and it's difficult to give you a full picture, even in my position of chair of the European Association. Maybe it has simply increased because of the need to be better secure and to face this kind of new risk or increasing risk, I would say. But it creates also extra cost because guarantees are the cost and extra workload, and we will talk about the admin burden that it could create. So time, speed, security, cost, resilience are becoming the key target for an efficient financial supply chain. And we will talk about how we could secure further the treasury. That's an important question. So the context is there, very complicated, I guess, and I'm sure that we will have an opportunity to cover the way to be resilient. And I can just give you the broad picture from the EACT annual survey that we run in last spring. We see that long-term funding is one of the major issues. But when we look at the top ranking, digitalization of treasury, and we will talk about that, how to digitalize, automate these processes is number 4. Working capital optimization, trade finance, highly ranked. We have also the political uncertainties, number 8. So everything is quite connected, I would say. New regulation, restriction, sanction screening also is quite important because these days we cannot do exactly what we want and we need to be compliant. So it's all the constraint, the additional constraint we corporate treasurers have to manage, and it's quite complex, I would say.
Yeah, and connecting also to the deglobalization, in my perception, that's naive. We won't find any lithium in the Netherlands, so that doesn't work well. So that's naive. But if I listen well, you say the turbulence and the awareness of the turbulence and what everything is happening is much more on the forefront than innovating and using guarantees any differently. So the use is not essentially changed, but the awareness, the skill level is going up, and that's how we improve right now in the application of these trade finance instruments.
Yeah, and guarantees mean bank guarantees. So we consume credit facilities. You consume part of your capacity of indebtedness. So it's quite important to be optimal because, as I said, long-term financing is an issue. So if you overuse your credit facilities, you limit your capacity to use them for future guarantees or for other needs. So we need to be efficient to limit the use of credit guarantees because we know that it's limited.
Yeah, and then going to you, Suchi, it's not easy for treasurers to mitigate risk and use trade finance. What in your perception are the 3 first aspects on a quick scan in order to really use them properly? What would you advise the audience here? What do you see?
Yeah, so I think the main 3 aspects when we do a quick scan is basically to see, whether the potential client it's quite important for us to understand whether they are assessing their current practices. So we typically go in and first assess the current practices, the processes, their pinpoints, their specific needs. And if I were to divide it into mid-sized corporates and into the large corporates, right? So it's very pertinent for us to first explore how long does it take to actually complete the bank guarantee application. And we were just talking about it 2 minutes back, to find out which stage of the process is most time consuming, right? Where are there maximum inefficiencies, redundancies? How do they basically initiate the request? How do they manage their credit limits? How do they keep track of the utilization? How do they manage their fees, the cost? What do they do around, the data control, the data visibility? For example, the CFO might want to have a centralized global view. So how do they manage that? Are they being able to track their overall global limit utilization?
Yeah.
Across multiple banking relationships, or is it lopsided, right? So that's the first thing.
Yeah, and I do think that that's something we will talk a bit more about later on also, but also there's a very obvious case in the Netherlands where a group treasury had over 1,000 guarantees, and they were not managed at all. So the bank was making a lot of money, and it was really hard to wrap them up. And also, do you recognize a lot of treasurers not so much focusing on the costs aspect, but much more on the hassle aspect? Because that's what we also hear a lot in treasury communities, that the hassle is the worst and not the cost.
That's right.
Yeah.
That's right. And that's the pain, right? The inefficiencies and the hassle of actually being able to manage it and to keep a track and control of it. That is more pertinent. And obviously it has a ripple effect.
Yeah.
Not kind of control it right at the beginning.
Yeah.
From a large corporate perspective, the other thing which keeps coming is, okay, well, they might not be all manual. They might have an application in place, but all these applications could be very disintegrated. So even if they have an application, is it future-proof enough to take it to the next level of operational efficiency? We talk time, cost, money, obviously all translating into the money on the table. But what is the level of the data integration between their ERP systems, which, for example, is managing the limits, their CRM system, their treasury management system? Do they actually have a centralized view? Is there a data exchange and a data synchronization between this? Or are these, they really have applications, but these are really not connected together? So that's the other aspect.
Yeah. And Sander, I want to briefly go into reverse here, because I think what Sushi is mentioning there is highly valuable. But as a former banker and corporate treasurer, did you also encounter a lot of situations where you see corporates using the wrong instruments? Do you think there's enough expertise to decide, okay, this is the risk, this is how it should be mitigated, and it's done properly? Is that already covered well by corporates?
Yeah, what I can tell is that trade finance instruments are very vital to the business. So you need them on time. And in the construction sector, each project requires a trade finance instrument to go through. And it's mostly requested in the final stage of finalizing the contract, and needs to be there in a very short notice. And it's very important for a corporate to, what Susie said already, to scope the processes around those trade finance instruments, to get familiar with the internal processes to manage the life cycle of the guarantee very good. And often a treasury management system is set up for cash management and FX related activities. So it's very important to set up a treasury management system which can support the managing of the trade finance products, etc.
Okay, yeah, thank you. And we'll dig in a bit deeper. I have an in-between question then for Francois also, because in FX mitigation, if FX risk mitigation, for instance, you at one stage saw a lot of corporates using way too many derivatives. Not all, but cases have been there. So the buying of tools was not in balance, so to say. Is that also perhaps the case within trade finance, or do you encounter, are most corporates, do they have enough expertise to know what to buy in trade finance instruments?
I don't think it was. I agree with what you said. Although since we have the new accounting standards, so we have simplified the type of FX instruments we are using for accounting reasons. In trade finance, yeah, we had some sophistication in the last year, but I have the impression that they try to keep things simple, and it's just not the complexity of the instrument, the quantity of the instrument, and as mentioned earlier, I think that by the other panelists, it's quite difficult to make sure that you, and especially when you have long-term guarantee. So the length of the guarantee could be an issue, just to make sure that sometimes it's digressive or you have installments, so it could be reduced. And to manage that properly, that's complicated. So the product itself, in my view, is not that complex, but the quantity and the management over time could become extremely complex, especially when you start having, say, hundreds or thousands of guarantees.
Yeah. Okay. And Suchi, can you, and by default, trade finance requires many people in the corporate to be involved, not only the treasurers. Can you take us a bit through who is involved and what's their expertise level? What your observation is there?
Yeah, absolutely sure. So yeah, primarily it is obviously the Treasury Department, right? They would oversee the entire trade finance process. They'd manage the cash flow, liquidity, the financial risk, all that we have spoken about. But then there are multiple roles. There is obviously the strategic head of the Treasury Department, but then there is the operations team, the legal team, the risk and compliance team, and more often than not, there are different people who would don different roles if it's large corporate, but then again in small, mid-sized corporates, multiple roles are played by a single individual. So treasury professionals, generally, they are very well versed in the trade finance fundamentals, but their expertise would vary, right, on the complexity of the trade activities, the frequency of the trade finance activities, and then also the volume that we spoke about. And companies with higher volumes of international trade, they have very specialized trade finance experts. We also see the finance and the accounting department. They come in because there's a whole lot of payments, reconciliation, compliance, coordinating with the banks. They have a strong grasp of accounting, documentation, but they might lack the expertise in complex trade finance business, in trade finance solutions per se. And ultimately, I think the legal and compliance team are very crucial in this whole aspect. They are very well versed with regulations, policies, laws, reviewing the contracts, etc. So very well versed about trade finance regulations, but are not typically involved in the day-to-day operational aspect or strategic deal structuring, for example.
Yeah, and that also leads them perhaps not to act as quick as they sometimes should be, because I think there's a lot of frustration among treasury experts, Net.
Yes, there is a lot of post-mortem that happens actually, which
yeah, I think it helps with the frequency, and similar to that, or in parallel to that, Sander, next to a lot of people being involved, very often a lot of systems are involved. I wouldn't be surprised if Excel rules, as it so often does. But what did you see as a banker or now in systems, the TMS, the Excel, the ERP? How is it managed? Tell us about the infrastructure.
Yeah, in the ideal world, you see that the life cycle of the guarantees or the trade finance instruments is done via treasury management system, which is a connection with your ERP system, which links it to the work in progress of your projects, etc., and milestones in the projects, so you can manage your trade finance instruments linked to that, and linked to the banking platforms to request new bank guarantees or surety bonds, and manage your trade finance instrument at the bank with an API connection, I believe. And all.
But what's the reality? What's the reality?
What you see is that we use our treasury management systems, and we do a lot of requests manually to the bank. That's in practice. But some corporates use digital connection platforms to the bank and use the system to manage those bank guarantees. And ideally, you have one platform to connect those systems to each other, and use tooling such as Power BI, not Excel, Power BI, to slice and dice the trade finance instruments and manage it from there.
Yeah, but it's a matter of time, investment before we get there. In your perception, is it in 10 years this is all integrated and smoothly running, you think?
No, with API connections and with such standard connection procedures, it could be there in just a couple of time to link those systems together. But it's an investment, and it takes time indeed to get there.
Yeah, and Francois, do you also see with people you talk, treasurers you talk with, that it's a bit blurry because of all these various platforms?
Yeah, no, it's a key point mentioned. So we need to integrate, because depending what you use, it could be Excel, it could be a dedicated solution. But at the end of the day, it will be resulting in flows, even if it's a balance sheet commitment, and we need to track them and to make sure that the information is aligned in different systems. easily integrated interface and make sure that we have one single source of truth and not multiple sources of truth. So that's a key issue. Ideally, would like to have a tool that is able to manage everything, a TRMS that could do everything, but at the end of the day, we know that it's not possible. So you need to find the additional and complementary tools to make sure that at the end of the day, you can manage all your things, but integrate it, or at least interface, just to make sure that you avoid the let's say the error in translating information or transmitting the information to the other tools.
Yeah, and Suchi, I think this is kind of your cue, because you deliver the dream, and of course this is not an invitation to pitch your product really hard, but you and your colleagues think about the smoothest, best situation. So can you take us through what the ideal is in your perception?
Yeah, no, and as I was listening to Sander, I think that's one thing we keep saying is our biggest competition is the Microsoft Excel function. So that's the premise that we start from. So we have been obviously from Surecom. That's our mission, right, as an organization, and I think individually all of us, that we would strive to enable the seamless, sustainable trade. And we've been doing that for the last 40 years. We've been working with hundreds of banks and corporates, right, across the globe. So the main principle with which Revo, for example, the platform that we are designed, that's enabled as a centralized digital hub, and all the good things that we've been talking about, right? The companies, the banking partners can all come into this platform on a real-time basis, communicate in a real-time basis, and execute a trade finance transaction digitally, efficiently, collaboratively. I think these are the main principles. What we have been seeing is, Peter, and I think that's very pertinent, we've been actually speaking to a large number of our customers, right, who've been using some legacy solutions, for example. The usual delays, obviously, without expressing in as many words, is the manual guarantees that are there, right? Within the platform, we aim to address how this inefficient manual guarantee text checks, for example, received over a paper document, received over an email, how are they actually causing significant issuance delays, and then obviously impacting the lower end of the chain. So what we are doing significantly is we've leveraged the AI capabilities, for example, and that's one of the many examples, right? We have leveraged the AI capabilities of AWS, used large language model. We have elevated the accuracy and operational efficiency of bank guarantees. So we are automatically converting unstructured data from an email, for example, to structured data within the application, capturing the key clauses of the request, the legal terms and conditions, the expiry date, the transferability into structured data. So we absolutely gotten rid of manual intervention, and then obviously looking at expediting the guarantee issuance from few days to a few hours. We've been speaking to one of our customers, we're talking of the lag time that they have between the application and the issuance, right? And these are areas where we see that we bring in significant improvement, because obviously the platform Revo, it's an API first platform. So the basic design principle is we will enable seamless connectivity via RESTful services, just not within the corporate and the application, but the corporate, the banking partners, the entire ecosystem of the trade finance multitude of the upstream and the downstream applications, the enterprise applications, the ERP system, the CRM system, the stock checking system, the trade-based money laundering system, KYC. So all of these, we partner as a true aggregator of fintechs via the open API. So all of them actually can come to the platform together, right? And collaborate and interact together to take off that burden of time and cost.
And now two questions in me pop up, both fighting for priority. The first is, as a treasurer, you start your day and you have to open your TMS and you have to your ERP and you have to, does it also imply that next to a whole range of 360T or FXall in your bank application, you also have to open a SureComp application, or did you create something that is that well connected that it's like one click in the button and the whole connected system opens up?
Yeah, and that's the design, Peter, that we have. So it's basically having that application, that one channel, which will then connect to the underlying applications. And it doesn't really mean getting into multiple applications and logging into multiple applications. The whole premise is based on a single sign-on, like with digital access protocol, right? So we get into that with a single sign-on protocol, have one applications, which is then underlyingly connected into multiple other applications, whether you need to do a digital verification or a KYC verification or a doc checking.
Yeah, and the other question then, because this make me happy, would I be a treasurer? The other aspect is the AI component. AI was really prominent at Eurofinance last week. Would it go as far that because of the integration to your ERP and other systems, that even not only in the application until completion, but also the part before, that the system already is warning you something is happening among your thousands of colleagues that might require a trade finance application? So that the treasurer would already get a sign because things are happening in the ERP, or would that be a step too far?
No, I think what we are doing progressively is we are embedding this AI to go in and interact and get data, for example, from the multiple of systems, like, for example, from the ERP system or from the treasury management system, from the document classification or the data extraction system, right? And then be able to extrapolate that data into our application, taken all that data, use Power BI to be able to then pull up meaningful standardized reports which are relevant for the treasurer. So right from getting into the limit utilization, and we were talking of that as a classical, right? Okay. So how much has the limit utilization been, whether it is over or underutilized, what is happening across my hundreds or thousands of suppliers, across my 70 banking relationships, right? To be able to already extrapolate that information from an ERP, because we are digitally interacting with the ERP system on a real-time basis. I have, as a 360-degree view, I already have that limit utilization in front of me across my multiple bank guarantees, across my multiple banking relationships. So that's a reality. It's not a dream anymore, fortunately.
Good stuff. Now, Sander, I want to go to you, back to also the reality, and also to the title of this webinar, because we're talking about supply chain resilience. And what I'm wondering is this: are we really making the supply chain more resilient on a strategic level, or are we talking tactical? Are we saying, okay, we do our utmost, but it only goes so far and it remains at the short-term part? What would you think about resilience and trade finance in this case?
Yeah, I believe if you have the right processes, systems, and links to your trades of your treasury management system, ERP, and banking platforms, you have that in place, you're able to adapt faster to changing circumstances, manage your trade finance instruments better, and then you are able to meet your contractual obligation better and be more resilient to adapting circumstances, I believe.
Yeah, okay, good stuff. And now also going to you, Francois. I presented you as the visionary in this panel, so no pressure there. If you hear what Suchi's telling us, and you see what's out in tech there, because you have, of course, this tech overview in Treasury, which you regularly post. Where do you see us going from here? What's happening with AI integration, blockchain? What's your vision there?
Well, many things. First, I totally agree with what has been said. It's funny to see that at the time we talk about automation, AI, etc., So I would prefer to start talking about hyper automation. Let's try to make things working quite well. If you take two examples of cash flow forecasting or FX management, it's the same as the bank guarantee management. It's still highly manual, so a lot of processes. I do not think that the value of corporate treasurers reside in this kind of management because it's time consuming, admin burden, so it's a lot of risk if you don't have the dedicated tools. And so why not trying to automate the processes just in question of mitigating the risk, increasing the internal controls, reducing the cost, or being optimal in the use of credit guarantees, of the fair sharing of the credit facilities with bankers. At the end of the day, one of our members, a multinational company headquartered based in Luxembourg, and they have outstanding 9,000 bank guarantees across the world. So how do you want to manage that on Excel? So it's really difficult. And now they are facing problems because they know that they are not optimal. So I keep thinking that we have a lot of headroom for improvement, and I'm pleased to see that the Shocom solution that I know is helping treasurer to make things better and to be more efficient. But you asked me what is my vision. I think that AI, of course, is coming and will help us. And as you mentioned, with the Journey to Treasury, and we have 3 chapters in the recent Journey to Treasury, you can download this document. We were thinking with banks, advisors, the ACT, and also with SAP. We thought about, okay, we have a powerful solution, AI. What could we do out of it? And I think in one of the fields we've mentioned is certainly trade finance, where we see some potential development, maybe to detect some behavior, some risk. And I do believe that AI could help and could be embedded into the, let's say, trade finance management, but could give some alerts that could be quite useful for the corporate treasurer. It's that role that could be more interesting for a treasurer than the pure management of guarantees. So
yeah.
And again, the future will be, or could we have a tool easily integrating everything? I think that it's not wishful thinking, but it's really difficult. So this day we are more trying to interface a different solution. I prefer the best of breeds or the best of suit approach rather than to have one single SAP solution doing everything. And even SAP, there's a BTP platform. So they have a sort of app store on SAP. I'm sure that one day Shurcom could be on the app store because they cannot do everything, even if it's a wish. And so we need to find good solution again. But this integration to make the best use of data is quite important because we came to the point data is great, but providing we use it and we have a certain standardization. So action in real time will be quite important, and efficiency because of the guarantee, as I mentioned. So we have limited credit facilities. It has a cost. The cost is increasing over time, especially with the new capital, let's say, requirement rules. So it's something that we need to manage carefully and to be optimal to reduce the cost for the company. So again, the future will be having one single source of truth, one single tool, but I think that it's maybe not for tomorrow. And so it's why we need a dedicated solution to help us and make our life easier, to save time, and to dedicate that time to added value tasks. And sorry, I don't think that it's managing this bank guarantee manually on Excel is really bringing value to the company.
No. I see a quite active audience right now, and there are questions and there's remarks. And some of them are beyond the scope of this session because it's also about what instrument to choose, which is a good question, but I think, as mentioned, outside of the scope. But also I see a lot of questions about making it more tangible and with real life examples. So all three of you, I always try to translate it into lower cost, creating something that is for the business that is otherwise not possible, or risk mitigation in a sense like downsizing risk. If you take these aspects, what kind of real life examples would you want to mention? Perhaps you first, Suchi, because I expect to see a lot of those. Oh, you're muted.
Sorry, my bad. Yeah, so I think a couple of good examples, and this is again coming from interacting with a couple of our large corporates very recently, right? One of them is a very large multinational in the Nordics, and they wanted to have a complete, efficient and a better control globally, and the visibility of their bank guarantees and credit facilities across, I think, 50 countries. And what they were not able to do is to have that structured process with clear workflows, data reliability, synchronized data, secure access across the multiple regions. So obviously using a solution and a platform like Revo from SureComp, I think that's what brought in a clear business benefit and a value, because it immediately improved the productivity across a large number of their European countries that they had, right? It streamlined their operations and then help them to focus on growth and efficiency, which is their business, and not spend time in data accumulation, data consolidation, and then analyzing the data manually. So having a single global platform with the ability to track all the guarantee applications, the processes, the issuance, the related activity, the limit utilization, and then having a real-time connectivity with the bank gave them obviously complete visibility of the process, right? That was one. The other thing, I think there was another corporate, I'm talking of this, they probably they had a lag time of 3 weeks by the time they were issued a guarantee. They had about hundreds of millions of euros actually of credit with multiple banks. I think about 7 or 10 banks. And each one of these banks, they had their own application process, right? The own way. And the treasury team was a very small team of about 5 or 6 people. Now, that was absolutely impossible to achieve. They needed to connect to a global network of more than about 100 buyers and suppliers of different sizes, and then obviously interact with each of these 7 banks with different application processes. So they obviously wanted to have a uniform, structured, common workflow-driven guarantee process that all of them can use together, right? They wanted to have the digital bank communication, the document exchange digitally, etc. So integrating their TMS system, their own approval system, amendment system, getting those real-time notifications that we were talking about of the limit utilization, of the fees, of the costs that they are incurring. All of that actually helped them significantly to bring in clear business benefits.
And Sander, do you also have some examples there where what you did, for instance, within BAM, perhaps using other applications or kicking out 1 or 2 banks to lower the cost or make things easier?
We integrated tooling with our treasury management system, such as Power BI, to give all colleagues insights in outstanding bank guarantees and expiry dates to manage those guarantees linked to the projects. But if you have a more useful interface where all colleagues can use, it will save a lot of time and money managing those instruments, I believe.
We are entering the last 5 minutes, and there are like so many unanswered questions in my list here. So there's enough inspiration for another session, but we'll stick to our 45 minutes. I think what resonates or what stands out for me is the relationship with banks, but also the perhaps fraud prevention, the TBML, trade-based money laundering aspects, for instance, and of course the development of the supplier landscape in this field. So what I would like to do is give each of you 1 or 2 minutes and reflect on what you think should be mentioned here at the end of this session before we wrap up. So perhaps you can go into the audience and perhaps first Shuchi, then Sander, and then Francois. So Shuchi, perhaps your final part of this presentation, please.
Yes, no, thanks, Peter. I think all the good things that's been discussed in the panel and with the audience already, but I think the top few things which really comes across is how can we help automate the process, stop losing time and redundancies and inefficiencies in managing the application or the issuance process, automating the limit management, credit utilization, requests, internal communication between the colleagues in the corporate and the external communication, right, with the banks. Yeah. How can we make that more and more efficient by digitizing and automating? The second thing, again, looming large, how can we help improve the integration between just not the TMS or the ERP system, but the other ecosystem players like the TBML? You talked of the trade-based money laundering, we talked of the KYC, the due diligence, the compliance, the document checking, etc. How can we foster and empower that open collaboration with the treasurer and his team and these various counterparties, the multiple banking relationships, right? And then obviously, again, how can we help the buyers and the suppliers actually to come in together and to leverage some supply chain finance programs, for example? So these would be the top three, because ultimately we are looking at enhanced efficiency, improved accuracy, lowering cost, seamless integration, and scaling up, right? With obviously with an eye to compliance and security. So how do we bring all of these together with this?
Sander, I don't envy you. There's so much on your plate. If you listen to Suchi, there's so many aspects that with a relatively small team you all have to manage. I hope it's a lot also common sense and taking a step back. But what are your final thoughts for this session?
I fully agree with Suchi. Get familiar with the life cycle of the guarantees and of the trade finance products from the new request until the closure of the trade finance instrument, and arrange the processes around it and link it to the IT landscape, such as TMS, ERP, and the banking platforms. And if you can automate that, it would be a really good thing.
The dream. So great. Francois, you have the honor of the final thoughts here.
Yeah, no, but final comment. It's something that we could compare to KYC, where it's still heavy manual, heavy paper-based, etc. So I think, and I remember a time not that far, we were still using faxes, analogic faxes, to transmit guarantees. So I think what is key, and it's good with solution like Revo, that you have the link between the banks, because they have the agreement with quasi all the banks in the world, and the end users as we are. And for us, for banks and for the other, it's important because you have a lot of affiliates operation. So you need to liaise as treasury with the operation, because they need the guarantee and we are a service supplier. We need also to link and liaise with the legal department. So many departments that we need to connect and to make sure that we have one single source of truth, but we can simplify and smooth the processes. I think it's extremely virtuous, because by doing that, you can improve the control, limit the risk, improve the AML, sanction screening, etc. control, be more efficient and optimal with the credit guarantee use, etc. and make sure that you are not paying for guarantee you don't need anymore, etc. So I think it's extremely important to automate the processes, because it could become, in some cases, impossible to run and too risky. No, I think that we need this kind of interface and make sure that we can transmit the information on a more digital, secure way, because I'm still surprised to see how the guarantee could be transmitted from A to B to the beneficiary. The paper remain quite intensive, and so get rid of that. We can be more efficient and faster in getting the guarantee, and so releasing the stuff for the merchandise and so on to the beneficiaries.
Yeah, good stuff. Well, taking a step back, I'm a bit dazzled, because there's a lot, as I mentioned already to Sander, there's a lot to digest. But what's good is, on the one hand, what I take from this session is keep your eye on the ball, on what's important, communicate with everybody, keep an overview, and also from Suchi, I most definitely take all you can think of is possible, but you have to organize it properly. So that's for me quite inspiring. So I hope that's also for the audience. So I think there's enough in not too long for a new webinar there. So thank you, Suchi, thank you, Sander, and thank you, Francois. Great you were here and willing to share all your expertise. Of course, thank you, people of Treasury Excel and SureComp, who made this session possible. It will be recorded and distributed, as mentioned. And thank you, of course, audience. Great you were here. I hope I will see you again in the next session. And keep an eye on what's happening on the socials and on the website. So have a good day. To be continued. Bye.